right, we back once again with some ICT strats from Vic. Do I know what I'm doing with ICT? Not particularly. Well, I do know what I do know how to read price action for one. Okay, I know about higher highs, higher lows, lower highs, lower lows. Right, and that's sort of the basis. Higher highs, higher lows, lower highs, lower lows. Sort of the basics behind the ICT strategy. So that's sort of the first thing you want to sort of get around your head is like where are the higher highs, where are the higher lows, and if you have a good basic understanding of that, all the other stuff is just fancy jargon, but it's super helpful because it creates a framework for you. So first thing we want to look at when we're looking at a chart, I usually start on a 3-month. And what I mean by I usually start in a 3-month is I've only been actually using this for maybe a week or two, but this is what I've been doing. Is starting on the 3-month for most tickers, except for futures. But like SPX or SPY or Tesla, Nvidia, start on the 3-month. But for futures, I start weekly, and we're just gonna look for the premium discount arrays. Okay, so what do I mean by that? A premium discount array. Premium discount is essentially a fancy way of saying, buy low, sell high. Okay, so that's so easy to say, but where is low and where is high? So that's what we're going to try and find out with the premium discount array. We use order blocks, breaker blocks, and we use fair value gaps and consequent encroachments. And we're going to use these higher highs, higher lows as sort of where we're going to find our draw on liquidity. Okay, so a draw on liquidity is going to be the ultimate key to victory in all of this, because where is market trying to go to find liquidity? And if you ever listen to my other videos about GEX and options positioning, we're always trying to find the magnet. What's the big level that the market is trying to, essentially go to, because of dealer positioning and selling pressure, buying pressure, that kind of thing. Who's getting crushed on vol, which it seems like is always happening, and it never ends. I think it's coming to an end, but that's my own personal bias. Anyways, so we're gonna start here. What the first thing I do is like, okay, well, let's find out what this market is doing as far as a trend goes. And so, in a sense, you could say that this was, probably, they ran the stops there, but you could essentially say, look, they made a higher low, right? So you could say that's a higher low. There was a higher high, higher low, lower high. And basically they just kept running it out because there's no lower, higher, lower, lower there. So essentially, this is the next higher high from this leg, which is just, I know it seems crazy, but so we're going to start with those 2 points. This point here and this point here are sort of our higher highs and higher lows. Okay, so on a weekly time frame, this would be premium and this would be discount. Now, where is the levels we should look at? Well, here's what I would call the order block level right here. Okay, so we just call it positive. I usually do this weekly order block. Okay, and some people, sometimes I'll use the whole candle and push it out into the future with like maybe a box. I'll do something like this and label it. But for now, this would be a draw on liquidity if we start coming back down. And it would also be a support. So you can see what the market did as it came down into that level. It ended up going much higher. So that's our weekly order block. And the reason that is because it's the biggest down candle into a support, and it was engulfed. So once it gets engulfed with a candle and a close, it becomes the order block. So it's actually not an order block until it is confirmed. That's something I like, though. It's like, clear cut. It's an order block. Once that candle engulfs it, that becomes the order block, and you can see how it was respected the whole way. So that's going to be essentially a discount weekly order block. And why is it a discount? Because it's the lowest one, right? It's near the swing low. Okay, so now we got the swing high up here, and we got another order block. Where's the order block? Right here. Again, up close candle, so it's the opposite. It's the biggest up close candle into a resistance and a swing high. And I don't know if we're technically confirmed on it being the swing high, but right now I'm using it as that because there is a big weekly order block there. So weekly, negative order block, and it's a premium array. So we got our premium and our discount set up. Next, I'll be trying to find this trend here. I want to find the draw on liquidity. So I'll keep all this stuff up here. We're going to find the draw on liquidity. We found the premium discount, order blocks, and fair value gaps, and consequent encroachments. And I sort of put that in order of importance for me. So we want to find premium discount. I don't know why I care about that so much. And then draw on liquidity. So this is sort of the order I go in. Draw on liquidity is usually tied to equal high, equal lows. So an equal high, equal low would be something like maybe like that. I think it's really pronounced on NQ, 4 hour. That's kind of where we went today. Yeah, right here. So this was my key for today, was the fact that we had these equal high, equal lows. I had a really strong sense that we were going to go right there. And check this out, okay, real quick. If we drill down in here, you can see we went right to it. And as soon as we broke that, it was just another, I don't know, 100 points or so, something like that. But that was my main driver today. My main bias was created around the fact that there was that equal high, equal low. And something similar was kind of showing up in ES. We didn't actually reach the sell side in ES yet, but I would use sort of like a higher time frame sell side, which would be right here. Okay, so there's going to be a lot of stops under here, and that's sort of where the draw is going to be, is where all the stops. And that's where I think when we're trading charts is we see a lot of naked space here, right? But in fact, if you could look into the order book, there's a lot of limit orders. There's a lot of stops sitting around here around price and sort of pushing price up and down, or actually price is being influenced by stuff that's happening outside of where price is, right? Someone sees a whole bunch of spoofing, or limit orders get put in here, and okay, well, that looks like support, so people start buying here, and it influences. Anyways, I don't really want to think about that too much here. I just want to find the draw. Okay, so one thing I would also note is we're sort of at equilibrium here. We have the discount and in our premium here. I would say that this sell is probably more than likely to get hit, given that it's right here in the equilibrium. And it's the biggest draw that's nearby at this moment. I would use this as consequent encroachment, but this candle is still, it hasn't closed yet. So not really going to use that yet. I'll use other candles, like maybe right here. But again, that's last on my list. I don't care about those as much. The order block and breakers and the fair value gaps are sort of my three that I'm going to look at. So we got our draw on liquidity for the week. So I'll put that in there. Let's just make a little note here real quick. Weekly draw on liquidity. Or you can write weekly sell side. I usually just typically do that. Weekly sell side. Okay. Just to keep it easy. So then we drill down to the daily, right? Okay, so same kind of thing. Now on the daily, we're going to start following the trend again. Our higher highs, higher lows. We're just going to follow this process here, find our premium, discount, order block, and we're going to do this whole thing for the daily. So we had a high here, sort of a swing high that was posted in here. Let's find our other arrow. Okay, and we really, we've kind of just been dribbling down. This may be a lower low. I'm not sure yet, but we have to sort of treat it as a lower low. So our higher high essentially here, or maybe here. And I think it's going to be here personally. So, and I'll show you why in a minute. So we got our potential lower low and our potential high, lower high. And so we're just going to find our premium discount. And I think when we're talking about order blocks, it's sort of my next thing I'm looking for, because I don't see many draws on liquidity here for the daily, except for just this line, right? Like this one right here is just going to be our draw. And then we could probably find these. We'll talk about how I think these are probably going to get tagged this week, or maybe even next week. This week maybe is a little too far away, 4150. I mean, we're talking like limit down conditions, so I don't really want to go that far out and say that we're going to be limiting down anytime soon. But over the next couple of weeks, I think this will probably end up being the next draw. And you can see how already we're getting our framework for, this week, next week, and sort of where this market is sort of trending towards. And it's really all about that premium discount and that draw on liquidity, and then basically using these as sort of our guides as far as entries and exits and that kind of stuff. So what I would be looking at next is this order block that was created today. on a daily time frame, we got a daily negative order block. And in fact, I would even say this may be a premium, given that we're probably posted a swing high there. As they took out those highs there, any stops that were sitting there, and they brought it back down. So I think this is probably your lower high, and this is probably a premium. And given that our only draw on liquidity so far on this entire chart is 43.50, that makes a lot of sense to me. And so our next target right now is just this 43.50, and then you probably end up seeing some 43.05, and then ultimately 41.52s, which, you know what, I'm going to put it on there for now just because I'm doing this, and I'm just going to use this chart. But this is going to be a daily sell side draw. Just because you can see these equal lows here. That's going to be a lot of, and they even tried to come down and test it again. So there's going to be a lot of stops in here. And then you got the draw. I use these order blocks and fair value gaps essentially as if we're trending towards them, I'm using them as draws. And when we get there, it's going to act as support. So we're going to be drawing up into this order block eventually until they come and take this sell side out. That's sort of my plan for now. And I don't see any fair value gaps really to use here. We'll probably set a fair value gap here. But for now, this is sort of the way I'm playing it. You have a consequent encroachment right here on this daily wick. So we'll just daily CE. I don't really care about it too much just because I'm already targeting 43.50, but I'm going to use it there and see if we do print maybe a double bottom here or something like that, then I'll know next time if there's consequent encroachment here, then that's going to act as extra support. Okay, same process we're going to use here we're going to find our higher high, higher low order blocks, fair value gaps, and CEs sort of on this 4 hour here. So now we're going to start trying to drill in. We have our ideas of what the market may want to do. And so now we got to try to line up where we want to get in and on what time frame is going to be optimal. So we want optimal entries, want as little drawdown as possible, right? I mean, I don't want to be taking 50 points of drawdown to be in a short for 50 points, right? I want to be 10 points of drawdown for 50 points or something like that. So we got our weekly sell, our daily sell. The weekly sell is obviously going to be a bigger draw than the other. We do have a fair value gap here on the 4 hour. You can see that. Now, fair value gaps are when, you got a closed candle, then you have another long candle either up or down, but it never comes back on the next candle. It doesn't come back and retest the previous candle. So it's like a 1, 2, 3 candlestick pattern, and you essentially have intraday gaps. Everybody likes to trade daily gaps. But I don't think they're, based on this, I don't think they're trading them right, because the gaps are actually a 3 candle pattern and not just a 2 candle pattern. So this is a 4 hour value gap. So we'll just notate that. So that already kind of gives me my trend. We have our target here. So this is our draw on liquidity. This is our draw on liquidity. We're at equilibrium. We're probably going to break down into a discount array. I don't see any other daily discount arrays. So really, we just have our weekly, and I guess you could call this a daily, but I don't really think that makes any sense personally. So again, I could be wrong, and let me know in the comments if I am, but it doesn't make sense to me. If we're just following the trend and using this as sort of our guide, it makes more sense that we break this sell side and then continue down here. We'll probably get more ways to short into that essential move down into the discount array. Okay, so clean this chart up a little bit. So we got the 4 hour, we got a 4 hour fair value gap, and right now we're in this candlestick, right? So they may be printing another fair value gap here. It doesn't make a whole lot of, it doesn't really make a whole lot of sense that they're going to be able to bring price back into this fair value gap. Why? Because there's this daily order block sitting right here. So 4,400 it just so happens to be that order block. which is interesting. You'll see that happen all the time, where these levels are always aligned with big numbers and big breaking areas. So we got more order blocks up here, but again, we just want to keep our chart sort of clean. So we got our setup here. We're going to be shorting into these levels, essentially targeting 43.50 and lower. We have no idea if it's going to be able to make it down there anytime soon, but we do want to make the trade into the 43.50 area. And we'll wait for our time component then too. So the time component part of trading, definitely look into the ICT modules, in my opinion, and talk about when to trade, why to trade, when to just sit there and just wait. It's sort of akin to, don't trade when there's no volume. Don't trade a breakout if it wasn't supported by volume. It's super basic stuff. Don't trade when there's nobody out, there's no liquidity out there. Because what's the market's function is to go to liquidity, but if there's no reason for it to actually move, it's probably not going to. Because it's essentially only going to move when it needs liquidity. So we just need to wait for that to actually happen. And so now we drill down to the 1 hour, and we did get a fair value gap right there in the 1 hour, and we're trying to trade up into that 1 hour fair value gap. Okay, so and that's right into that premium order block right there that was created today. So if we start moving into these areas here, then you start getting a little worried as a bear and going, okay, well, maybe they're going to start targeting these upper levels of liquidity. We could probably use this on the hourly as a draw. We could start waiting for some fair value gaps and order blocks to develop on the way back up to get in and target these levels and higher. But as of right now, we don't have that setup. The only setup we have is to target this 43.50. And right now we've got an hourly setup into these lower draws. So I'm actually going to come in here and we're going to sell. We're going to sell one. We'll just kind of see what happens. We're on the hourly time frame. So if we're on the hourly, okay, I'm just going to kind of wait and chill, let some hourly candles print before I get a little too antsy. If we start breaking up in here, we'll start taking our stops. And then we drop into the 15-minute. And we can see, like, right when I did that, it sold. But now we're going to follow this 15 minutes. Since we're on the hourly, we're going to follow this 15 minutes, see if we can print some fair value gaps, get some order blocks going to kind of drive us lower into these daily and weekly liquidity draws. So we got one right there. So if you were going to take multiple contracts, maybe you would take some contracts off here at the encroachment and then kind of wait for your ultimate target. Maybe 3 contracts, take one off there, one there, and then see if you can let one run for the lower time frame or lower discount level. But that's essentially how I've been using ICT, and I hope it helps you. I do incorporate some other things as well. Like for today, I did use some GEX strategies that I've developed, as far as, how much is expiring? Are we in a negative gamma environment? Where's the volatility trigger? All that stuff that I've talked about in previous videos. I do incorporate that to sort of give me, because that's just my bread and butter. So using that, but then using this as sort of my execution platform. And hopefully this helps you. If it doesn't, still drop a like. Let me know in the comments if you want more of this, or if we want to go back to GEX, or if we want to go back to algos. Hopefully I'm back to do some more videos for everybody, and we'll see you next time. Peace.